And I think, using a data room at this point to manage the diligence process is really essential for any fundraising. Having the ability to provide access to investors securely is important. Also, the ability to kind of see what investors are looking at and focusing on can help a fund manager really gauge interest levels of those investors. And I think also using a platform where you can lock down any sensitive documents or give access only to certain documents to investors as they move further down the path is key as well. I think, just overall, I think technology really can help make the process go more quickly and smoothly and potentially, reduce time to close in some cases. I think all that being said, though, I think, this business is still very much a relationship business, and technology will never take the place of that completely. I think technology can help aid in the process, but relationships are, I think, at the core of the fundraising process. And that's from an Intralinks perspective. We were bought by SS&C about a year and a half ago. As many of you are aware, SS&C is the largest fund administrator and provides services and technology solutions to help support a wide range of fund managers during fundraising and after the fund is closed, helping to support the back office, and again, really helping to strengthen and foster a fund manager's relationship with investors.
That's great. Thanks, Megan. And Keith, I know that Holland Knight has developed something rather interesting and special. I'd love to hear about what you do for your firm and how that relates to Cap Intro.
Yes, thank you, Jamil. And thank you, everyone, for having me on this call. It's obviously a little bit different than what I think we all would prefer, which is some in-person interaction. But obviously, these types of times require us to get together like this. So I appreciate the opportunity, Jamil, and to the HFA. So as Jamil mentioned, my name is Keith Ferry. I work at Holland Knight, a multinational law firm. We have over 1,400 attorneys across 29 offices, and we're a full-service law firm. And I believe the latest numbers just came out last week, where we were ranked number 38 on the AmLaw 100. So we keep climbing the charts that way through different growth and acquisition opportunities throughout the country and expanding our offices and the number of attorneys at the firm. That's just by way of just a quick background on Holland Knight for those of you that are unfamiliar with our firm. As Jamil mentioned, I was brought on to the firm, well, at this point it's now 2.5 years ago, to launch what we call HK Deal Flow. And it really was an effort on the firm's part in providing what we now kind of call a deal matchmaking service, or a capital intro service that provides an extra layer of value for our clients and prospective clients and friends of the firm. It's a way to differentiate our firm from other middle market law firms. And the goal of the program is to essentially put this program in the middle of deal flow and capital flow opportunities by essentially matchmaking opportunities coming in one side with capital sources on the other side. So it's a program we don't charge a fee for. We don't take a success fee. We'll probably get into that a little bit later in this webinar to talk about why that's the case. But just very briefly, we're not, as we'll talk a little bit more in detail later, we're not a broker-dealer. We can't be a broker-dealer. So we have created this program free of charge to make these cap intros, to essentially make connections between either party of any type of transaction, and doing it in a way, like I said, free of charge, that prevents us from going down that path of being recognized or even thought of as a broker dealer. So it has been a really big success for the firm. We have found that although I started this program out of our private equity group to source acquisition opportunities and connect those opportunities with private equity funds, it has grown very quickly into just about every space there is a potential introduction. So, the relevant kind of part of the conversation for this particular group is I have found myself making introductions using our firm's network and my own network, from family offices to hedge funds and family offices to different fund investment opportunities, and vice versa. So it's really grown very quickly, and we'll get a lot more into, I'm sure, the details of it. But that's a high level of what I'm doing at Holland Knight, and it is a unique position and a unique way to approach it at a law firm and a service provider generally.
For sure. I'm not aware of any other law firms that have such a robust, established program as Holland Knight. So very, very fascinated. I'm sure our listeners are very intrigued to learn about how that works. Maybe, Keith, if you could follow up that up, and then Meghan, to talk about, who are the folks who take advantage of these alternative cap intro services? Are these private funds? And if so, are they more on the illiquid side or the liquid side or the deal sponsor side? Kind of give us a sense of who the folks who typically use your services. And then how does your firm measure success? What constitutes a successful alternative cap intro relationship or experience? Keith.
Sure. Happy to talk about that in a little bit more detail. So as I mentioned very briefly, we initially launched this out of our private equity group with the intent of playing matchmaker in the context of acquisition and growth equity opportunities. So on the capital side, we initially had private equity funds of all sizes, typically middle market to lower middle market, but some bigger ones that were involved in looking for deal opportunities and introductions. Then that grew to a substantial number of family offices, and as most of us know on the call, or all of us on this call know, when talking to a family office, yes, they're looking for direct investment opportunities, but then I'd frequently get questions like, hey, what private equity funds are you seeing that are raising new funds? We'd like to talk to them. And then it grow, and it has grown and expanded to those requests coming in from family offices and other capital to connect with funds of all types. And then on the other side of the equation, we've had, hedge funds and others come to us and ask for introductions to our family office network. We have one of the largest, if not the largest, private wealth services group in the country as a law firm. So you can imagine that the number of family offices we work with is quite large, and they are all looking for different ways to deploy capital. Maybe not so much right now, but obviously prior to everything that's going on, and certainly things will pick back up again. But yeah, so the capital that's involved and the types of introductions that we make are really across the board. Again, I initially thought it would just be primarily focused on private equity transactions, but not surprisingly, when you have a deep network like Holland Knight and are able to facilitate introductions, the requests come in from a lot of different fronts. And I'm finding that the cap intros and the different types of deal introductions we're making has grown substantially across different practice groups. And then to hit your second question, how do we track success? I've been fortunate enough to be part of a firm that when we initially spoke and talked about how do we track success, our managing partner and others at the very top levels of the firm made it very clear that success would be tracked partly in a very big way about just the value we add to relationships. It sounds kind of funny because everything should really be tied back to revenue, at least in my experience. Prior to joining the firm, running sales teams and business development teams, you want to track it all back to revenue. But I've been given a pretty broad mandate to really focus on how does this add value to our relationships. Of course, revenue is one of those, but how do we add value in a way that other law firms are not adding value? And when you put yourself in the middle of introductions and really make an active, proactive effort to do that, and being able to measure, those thank you emails that come back as a way to measure success. I'm fortunate to run a program where I can do that. So we measure success in many respects in how do we add and deepen, or how do we add value to relationships and deepen relationships. But then, of course, we do track back how do these introductions lead to legal work that, for example, do we get engaged on a particular transaction because of an introduction? It's never a quid pro quo. It can't be, but, certainly tracking back how do these relationships and introductions trace back to new legal engagements and new client relationships is a secondary or so sort of the second way we track success.
Great. And so, Meghan, I know Intralinks and SS&C and Intralinks is very technology heavy and savvy. But I'm wondering, how does that translate to the types of clients that you see? Are you seeing more in the liquid or illiquid spaces? And same question as with Keith, how does SS&C Intralinks track a successful platform introduction?
Sure. So we work with all types of alternative investment fund managers, from closed-end to open-ended funds. Right now we have over 1,500 fund managers using our platform, and we're really agnostic to fund type, strategy. We're kind of open to all. I think technology can be used by all. And then we also work a lot with placement agents and third-party marketers to really help them manage the fundraising process on behalf of their clients as well. And so, while we don't raise capital on behalf of our clients, we obviously help facilitate the process. And we're the largest investor portal technology assisting with fundraising. So over the last 12 months, more than $1 of every $2 raised globally for private capital was done on our platform. So I guess you could say from our perspective, that would be, our success rate. And I think in terms of our clients, I think using a platform that their LPs are already using and logging into can be extremely helpful. Right now we have over 240,000 LPs on our platform. So every LP has a single login and password. So when they log in, they see all of their fund managers in one place. So I think it's very easy for them to evaluate a fund manager using our platform, because that fundraising kind of pops up when they're logging into our system. So I think, from our client's perspective, I think success, is helping them streamline the overall process and hopefully, shorten the time to close for them.
Is that something that you make known in your promotional materials, or when you have initial introductions with prospects? How widely known would those services be?
Yeah, we definitely, we're very vocal about kind of those stats of, how much is raised on our platform. So I think that's helpful, and clear about how many kind of people are using our platform as well. So yeah, that's definitely something that we are promoting when we're speaking to clients and, up on our websites and things like that.
Great. So, obviously, I'm sure many of us want to make sure that any of these services are falling on the right side of the law, which in this case would be the securities laws. I want to talk just a little bit, and maybe we can develop a thread here about, what these services mean in terms of the existing regulatory and compliance regimes applicable to our businesses. And so, if I could maybe just for a few minutes talk about, how, as me sitting from a broker-dealer, traditional broker-dealer's perspective, how the rules work, and then let's talk about how, both of your firms manage within those guidelines to make sure that folks are acting on the up and up. So typically, as a broker-dealer, we're regulated by FINRA, which is, in turn under the authority of the SEC. And so the typical regulatory scheme for these kinds of introductions between issuers and investors falls within the rubric of broker-dealer activity. And so unless you have an exemption, you're required to be registered as a broker-dealer firm and a registered representative. And so traditionally, the FINRA and the SEC has looked at a variety of factors to determine whether the conduct in question rises to the level of transaction services, brokerage transaction services that require either to be registered or have an exemption from registration. And so I get questions very often from folks wanting to know if, making an introduction on a one-time basis, like is a finder's fee okay? And, if I want to do this, someone has asked me to review their marketing materials or help them structure a particular product, am I okay to do that and get compensated for it? And this is certainly not the place for me to issue those kind of pronouncements. But all of that to say is that the SEC has traditionally not drawn a bright line on these issues and instead intended to use more of a facts and circumstances test, a totality of circumstances to understand whether particular conduct requires registration. And so I can imagine, and I'd love our speakers to talk about how the introductions that they make available through their services, how they manage to keep guardrails on those, and how, what kind of internal processes, audits, or compliance reviews go into that, so that folks understand that they're not engaged in conduct that would require registration as a broker dealer. Meghan, let's start with the SS&C Intralinks. How do you guys keep your services above board?
Sure. So I can't necessarily speak to that exactly, because we're obviously not a registered broker-dealer, and we're not really raising money on behalf of our clients. We're really just helping facilitate it. So I think we're kind of okay in that kind of legal registration realm. I think from a compliance perspective, though, I think we do help. I think, having an accurate audit trail of what investors have access to, what they're viewing, can be very helpful in the process. And I think also having the ability to lock down like very sensitive data or potential IP is extremely helpful as well. So making sure someone can't print it or save it. We actually have a solution, an IRM solution, that allows investors to download a document to take a look at it and review it during fundraising. But if they decide not to move further down the process, you can actually take away their access, so the file is kind of basically virtually shredded after you remove their access, and they can no longer view the file. So I think we definitely have kind of tools in place to help with the kind of more compliance side of things that I think could definitely help with the process.
Is there any kind of screening that goes on to determine whether the folks who are seeking the investments are what we would call accredited investors, or is that not really a concern?
So that's done prior to giving them access to Intralinks, and so that is definitely part of it, but it's not necessarily done on our platform. So prior to gaining access to the data room, the fund manager or placement agent will definitely be qualifying those investors before they're actually giving them access to it. There are tools on our platform that allow them to, accept certain legal language and disclaimers before actually entering into the data room. And so a lot of our fund managers will kind of put that on as well, to do that as well, kind of as another measure in place.
Yeah, that makes sense. Now, Keith, Holland Knight, obviously a law firm, so we would expect that the team over there is well versed on the limits underneath the regs. But from your perspective, how do you make sure that you and your firm are compliant on the broker-dealer registration rules?
Yes, and you're right. Being a law firm, we're well aware of the restrictions and the issues that could potentially arise from having a program like this in place. So I think our safeguards are, there's some formal ones. For example, every email I send out when I offer to make an introduction includes very strong disclaimer language that this is in no way intended to we're not intending to act like broker dealers, and has a lot of disclaimer language included in every communication I send out. But the history of law firms and accounting firms facilitating what we just call introductions to parties that should know each other and get to know each other, and maybe there is a deal to be had, is a common practice, always has been. So we just have to be very careful, and I talk with our general counsel frequently about making sure the way we're making those introductions is very consistent with the way introductions are always made or have always been made. And we're not involved in any of the due diligence, as an example. So when I get information or a teaser in from an investment banker, as an example, the only information I'm sharing with the private equity groups that I think might want to see that teaser is the teaser. I sometimes get questions back from the capital source asking, hey, what do you think? Do you think this is a good deal, or do you know any more? And my answer is always very simply, I don't know any more than what I've provided. If you'd like to learn more, I'd be happy to connect you with the intermediary. So I think all the parties that are involved and participate in the program, we have many, hundreds on both sides, are well aware that this is really meant to be an introduction type service that, we're not learning more about every opportunity, and we don't have an opinion on whether it's a good one or a bad one. They have to conduct their own diligence. In many cases, I've actually had private equity funds, say, hey, don't flatter yourself. We would love to hear your thoughts, but we're not going to rely on your thoughts to do anything. We're going to dive in and do our own diligence in the way we always do. So it's the safeguards that are sort of more formalized are those disclaimer language that goes out. Me in my communication, I've got to use very specific ways that I present things both in email and when I'm talking to people in person about what we're trying to do, and that's really simply to facilitate introductions. And then sort of more informally, it's that those conversations that I have that essentially let people know, look, I don't know more. I can't know more. I'm not a broker dealer. We're not a broker dealer. We're doing what lawyers do by just making introductions. Anything beyond that is we don't really have any sort of formal systems and technology in place to monitor all that like Meghan does at her shop. But it is very clear, and my general counsel and I talk often to make sure we're staying within the guidelines.
That's great. And all of the talk of disclaimers reminded me that I should have mentioned at the top of the webinar that, the usual disclaimers on these types of presentations apply here. So namely that, none of the conversations here represent any kind of offer to buy or sell a security, right? The typical disclaimers there. And then also that we're glad to have our panelists here speaking, but that their views don't necessarily reflect those of the official policy of their employers and companies. So we always want to make sure that we're making clear that folks who are speaking here are doing so first and foremost of their own accord, and then as it relates to the policy of their employers, we always invite folks to reach out to those specific companies for official policies. That's great. So it's good to hear that SS&C Intralinks and Holland Knight are serious and compliant with regard to how they go about making these introductions. But what I would imagine everyone is curious to know is, how does the current COVID-19 epidemic, how is it impacting these introductory services that we've been talking about? How are those being impacted? And I will start off just by making reference to a couple of interesting observations that came out from Preqin in the last couple of days. Preqin's 2020 Alternative Assets Report made the following observations, that while private capital AUM has been reaching record highs as recently as 2019, in Q1 of 2020, Preqin found that there were already early signs of a market contraction happening in Asia and Europe. Preqin also reported that over half of LPs that they surveyed were lowering their 2020 commitment plans. They also found that deal flow in the buyout and venture capital spaces were trending downward. But ironically, and I guess hopefully, when they surveyed LPs, the LPs reported that over the longer term, they still believe that alternatives were great for them, particularly because they offered diversification as one of their main points of importance for them. So, it's obviously Preqin's report is one set of data points on this, but anecdotally, I would love to hear from Meghan and then Keith about how your firms are kind of digesting everything that's going on here, and if you've seen any dip in your cap intro type services since February or March of this year. Meghan?
Sure. So I think in terms of post-COVID world, we're definitely seeing clients take a pause from fundraising. I know some that were kind of nearing a final close potentially are looking to kind of race to the finish line as best they can. again, I think technology can help streamline the process and hopefully get you to a close more quickly, but we definitely are anticipating a slowdown in new funds being raised in this environment. We are seeing some interesting kind of use cases pop up. A lot of our clients are trying to adapt their operational due diligence process in this kind of current virtual world. And fund managers are looking to kind of move a bulk of their in-person correspondence to a virtual process. And I think given demands for transparency from LPs and the need to protect information that was once shared in person has become very critical for fund managers. So as I mentioned before, I think it's even more important for them to know who's actually viewing the files and when, and kind of full audit trails to make sure that they're protecting their IP that's protected and not shared more broadly is extremely important right now. So we are working with a number of clients on moving their ODD process to kind of a virtual process right now. And I think the other thing, which obviously we're all seeing, is more video conference meetings taking in place of in-person investor meetings. So using technology now is more important than ever, given the restrictions of the face-to-face meetings. And I think it's going to be interesting to see if that becomes more of a norm going forward. I was on a call with an LP a couple weeks ago, and she mentioned that they're talking internally about whether or not they really need to do an on-site visit before they make a commitment. So do they need to go and see if that office location actually exists? And they're leaning towards no. So I do think it's going to be interesting to see if there's more of a shift towards technology in the fundraising process going forward when kind of all of this is over. So that's kind of an interesting piece.
Absolutely. Yeah, the due diligence angle on that is really intriguing. I have been asking colleagues myself whether, at least on an institutional level, whether institutional investors are going to require the same amount of in-person exposure as they've done in the past. Keith, I know you do a lot of work in the private equity space and the institutional space. What is this pandemic doing to your platform?
So, echoing a lot of what Meghan had said, I certainly seeing a slowdown in fundraising on new funds, and I think if anyone was sort of in the middle of a fundraise, maybe they may be looking at putting a cap on their fundraising now and picking the efforts back up in the fall or even beyond that. So just a general slowdown on the fundraising side, and certainly a slowdown on the transactional side as well. But I will say one of the ways that the program that I run has really come in handy and really been leveraged in maybe even in a bigger way in this particular market and this environment is, as lawyers, not surprising for anyone on the call to hear, lawyers are very busy right now answering questions on COVID and CARES, on the CARES Act and everything. Related to what's going on, you're just, needing legal guidance. But I could say that partners that have not engaged in the program prior to everything that's going on now are reaching out and calling and asking questions of, hey, I want to reach out to these contacts, but I don't want to reach out to them in the COVID context, meaning leading with, hey, do you have a need for, a PPP expert? We have one. What they're looking for are alternative ways to reach out to clients to say, I know things are, kind of hit, everything's hit pause right now in the transactional world, both in cap intro, in fundraising, in just about everything transactionally. We have this program available. We do still have capital that's looking to do deals, looking to deploy capital into funds. Can we help make an introduction there? It's a new alternative way for them to reach out to clients and friends of the firm that maybe they haven't spoken to in months or years, to let them know that this program exists and that we can make introductions that might be valuable, not necessarily right now, but as we come out the other side of this. So, the introductions that I'm making now and the connections I'm making now in this environment aren't necessarily deal related, meaning I've got a deal in or a fundraising fund and I'm making a connection to the other side of the transaction. A lot of the introductions now are value added with a view of a long-term relationship being built and deepening one by saying, look, you should know each other, because when things, kind of come out the other side of this, party A on one side is going to have a lot of distressed opportunities, and you have capital to deploy into the distressed market. So, just get to know each other now before, you run out of time 3 months from now when things are really going like crazy, and the introduction is harder to get. Again, it's kind of a way to say the intros right now, I don't even know if you can define them as cap intro, because they're not necessarily directly in the cap intro context, but they are with an eye towards putting parties together that really should know each other. And those types of introductions through my program have ramped up, and maybe the benefits pay off, 6, 12, 18 months from now.
Sure. No, that makes sense. That definitely makes sense. Yeah, this might be a little bit off topic, but, one thing that I've been hearing a lot in some of the commentary is, what does COVID-19 and the government programs that are being offered to help fund managers, what does that mean for the fundraising process, particularly around, the kinds of disclosures that fund managers may or may not wish to make to prospective investors regarding their taking of assistance and what that says about their viability. This is not obviously a panel on the offering process, but I do raise it just to let folks know that COVID-19 is going to have some serious repercussions for the offering process, which I imagine will on some level affect how firms like Meghan's and Keith's go about making introductions. So I think the verdict is still out on what's around the corner, but it will be things that the folks have to reckon with for sure. I know that we are somewhat limited on time due to the webinar formats here. We have about 5 minutes left. I would love to, in the last 5 minutes, ask both of our participants to talk about, or at least offer their 1 or 2 top tips for those of our participants who are either thinking of using these firms for cap intro services of some degree, or who are thinking of getting into the cap intro offering themselves. What top tips would you offer those folks? Meghan?
Sure. I mean, I think right now, obviously, things are a little bit slowed or put on pause. So I think focusing on communication and building relationships is key, kind of to echo a little bit of what Keith said. So we actually, every year we conduct an LP survey and ask them, where they're looking to invest over the next 12 months, what are their thoughts on the market, what sort of asset classes they're focusing on, things like that. And as part of that survey, I think it was interesting, we asked, what was the most important thing they were focusing on when deciding on whether or not to invest in a fund. And returns were the most important, which is obvious. I think that's what we would always all expect. But the second most important factor was the relationship. So I think particularly in times like this, that's what's going to kind of get managers through. I think performance, is likely going to be down for some funds. I mean, for those that can pull through and have solid returns in this environment will definitely prevail, but I think relationships are very key. So particularly getting out in front of any bad news and just maintaining communication with investors. And I think being transparent about any cash flows so the LPs can prepare. I've heard a lot of managers are holding kind of monthly reporting calls with investors at a minimum. So at this point, I think over communication is a key theme as the strategy kind of continues to evolve, but staying out in front of investors is key so that when fundraising comes back in full force, they'll be in the best position possible. And I think, like I said, to echo kind of Keith's point, I think building other relationships that they can leverage when they are ready to raise capital is also extremely helpful during this time. So looking to other trusted partners, like Keith's firm, like, a fund admin or other third parties, which can potentially help introduce you to other pools of capital is a great idea right now.
Thanks, Meghan. Keith?
Yeah, and I don't think I can emphasize enough the point that Meghan was making. I guess emphasizing the point that I had previously made, but I think it's both. We're both experiencing it, and I think if for anyone on the call here that is thinking what do I do in a time like this when there isn't a lot of activity going on. I can't emphasize enough that at least my focus, and I'm getting calls from partners that I don't ordinarily see engaging in business development, reaching out saying, we've got some time, some downtime. Maybe there's, there has to be ways where you can offer to deepen relationships by, tapping into your own personal network to facilitate introductions that maybe when things are really going gangbusters, you just don't have time for or don't really think about. But when you're thinking about how does this look coming out the other side, I've been putting a lot of thought into what party should I be putting together now that in 6 months from now, because they get to know each other right now, are doing things together and transacting together and investing together. And then remember that I was the one who made the introduction in April when things were kind of going crazy in the world with COVID. So I can't emphasize that enough that, it's hard. There aren't many times, certainly I've been in business development, for a lot of years. There are very few times I can point to in my entire career where you actually are afforded a little bit more time to make introductions that may not have an immediate payoff, because a lot of introductions right now aren't going to have immediate payoff, but I'm spending the time making those introductions and thinking about how to make those introductions and who I should be connecting together, because I know it will pay off in 6 to 12 months, filling the very, very top of the funnel. And then I think from a firm's perspective, just a tip is, and I've certainly seen it happen in the last couple of weeks, is, our firm in particular, where I've had a lot of very senior partners and other partners agreeing to join calls to basically give out free advice to clients and friends of the firm that just need to understand, Main Street funding part of the CARES Act provision, the PPP part of it, where if you're a service provider or somebody that provides services for fees, whether it's cap intro, success fees, or whatever, offering your time up for free now doesn't feel all that natural for all of us to do that. But I can tell you that I get calls from clients or prospective clients or friends of the firm that will call me after speaking to the co-head of our bankruptcy group, who is ordinarily impossible to get a hold of, but is offering his time up for free. They call me up and say, look, that was probably the best 15 minutes I spent in the last week in understanding what my company may have to do to prepare for all of this. And I suspect that, in many of those cases, that's going to come back around to some sort of legal engagement at some point, because people remember, who was there for them during tough times and not, looking to start the clock running if you're a lawyer or an accountant or some billable kind of, environment. So anyway, those are just a couple of tips and things I'm seeing that are actually, successfully, kind of leading to positive feedback, value-added feedback, and just a thank you that, eventually is going to come back around where you might, they'll remember who did that for them.
So true. And I would just add on top of that, one helpful tip here is to consider the services that Meghan and Keith's firms do as part of a larger constellation in terms of fundraising. Obviously, fund managers are always looking for capital, be it from friends and family, from, mainline brokers like myself, or service providers in the ways that their firms make them available. I don't think this is an either-or approach. This is a both-and. Recognizing that our different firms provide different services according to what's possible and what their strengths are. So my one tip to the participants here would be is to look at Cap Intro from a holistic perspective. Do not be afraid to engage in conversations with your service providers. Understand what the risks and limitations are, but it is part of a larger picture of how fund managers can access capital in these difficult times. So, Meghan and Keith, thanks so much for these insights. I think we've just touched the surface on how firms can assist issuers with capital introduction, and I personally hope that this webinar spurs additional conversations offline, and would like to make one small note. This webinar today is being recorded, and we will make available, along with the slide deck, copies of both the audio and the slide deck for participants in the following days. Again, on behalf of the Hedge Fund Association, I would like to thank our participants and our event sponsor, SS&C Intralinks. And please, 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 everyone keep safe and enjoy the rest of your day. Thank you.
Thanks.